Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and it's my great pleasure to introduce Panikkos Euripides, who is not only a client of mine, but he's also a chartered surveyor. He does lease consultancy work, and he is a commercial investor. Pani, lovely to see you.
Hi Suzi, lovely to see you.
So thanks for joining me today. So I've done a little bit of an intro there, but would you like to kind of do a bit of an intro for everybody listening, just so that everyone can find out a little bit more about you?
Yeah, absolutely. Thank you. For those who don't know, I am a chartered surveyor. I have been doing that for sort of 20 plus years, mainly advising clients on all sort of commercial lease negotiation matters and kind of restructuring. And yeah, up until recently, have not had any sort of direct investor experience personally, but also just been sort of helping other investors with their properties and portfolios, really.
Good stuff. Yeah. And I always love doing these particular podcasts, which are client case studies, because, I think it's, as investors listening to this, it's always fantastic to hear how people have gone on a journey to find their first investment and to kind of start building their portfolio. So what kind of, Penny, what do you think the kind of main obstacles were for you to find your first investment? Because there's things like, time, experience, which you're definitely not short of experience, that's for sure. So time, money, what was it? Was it just time, or was it priorities, or kind of, was it just changing priorities that made you move into investment?
Yeah, I think ultimately it's a mixture of things. So I think just time in terms of the day job and sort of getting time to kind of explore the different strategies and putting the time into actually looking for deals, stacking deals, and that kind of thing. And partly, I think a big factor of it is confidence and just kind of support through going through that process if you haven't actually done it. I think, as a chartered surveyor, I've advised and consulted with various clients on various projects in the past and over the years, and you kind of tend to advise on certain specific aspects or that kind of thing, maybe not so much on funding or deal structure, that kind of thing, but more on the back end of kind of how to increase and add value or save costs. So it's kind of when you understand how to do the whole process in terms of what to look for, how to look for it, how to structure it, how to finance it. Those are the bits that I think a lot of people kind of struggle with, and that kind of had, I think that was a bigger challenge for me, is just kind of having the confidence to kind of work through that and actually figure out, okay, what stacks, what doesn't, how do you get to the next step in the process, really.
Yeah, absolutely. And I see that a lot. And you obviously have very much gone through that process, and you very much have kind of come out the other side, certainly of your first investment. So how did you kind of overcome, in particular, the time challenge you've got? Like, any particular tips and tricks you might be able to share with people listening about how you manage that?
Yeah, apart from just, I guess, putting in the extra hours, kind of in and around kind of work and life and kids and everything else, I think it's trying to sort of systemize as much as possible, get a bit of a system in place for finding deals, put some time in the diary regularly each week to kind of go through, whether it's portals or messages going into your inbox from alerts, or speaking to agents and actually getting out and seeing stuff. I think it's important to kind of pencil in that time, and as much as possible, kind of outsourcing as much of that with support from sort of VAs, that kind of thing, just to kind of help take some of that pressure off you and kind of add a bit of discipline into the equation, because it's very easy just to get distracted with life, work, other sort of shiny objects, and not actually do the fundamental basic things kind of day in, day out, week in, week out to kind of progress things forward, really. So yeah, I think just kind of building in that routine and structure is quite important.
Yeah, I think we've absolutely hit the nail on the head. I mean, in terms of, it's just a habit thing, isn't it? It's just getting into a routine and a habit of doing your sourcing. And it's one of those tasks that it's so easy not to do as well, because there's other kind of tearing priorities, but you very much have. And as you say, bringing VAs and kind of leverage into the process can really free up the time as well. So, and I would say that you've definitely done that to great effect, which is great. So obviously well, I know, but everyone listening doesn't know, but you completed on your first deal just before Christmas, which was a nice Christmas present, wasn't it? So do you want to kind of to tell everyone a little bit more about kind of how you found it? Because obviously we were talking a lot about niching and finding a niche in your investing area, but how did you find the deal that you eventually went on to buy?
Sure. So I think originally we sort of talked about and kind of worked through, as you say, kind of niching and trying to figure out, okay, what is it that I want to be looking for and doing in terms of investment? You know, is it SA, is it HMO, is it commercial, is it this, is it that? So I think given my background in commercial and lease restructuring and rent negotiation and that kind of thing, I think I definitely wanted to tap into that and kind of utilize that as much as possible, just to kind of take advantage of that as much as possible. And so we looked at a few different things, and I think ultimately it was kind of, okay, start kind of as local as possible. So, and then kind of work out from there and see what sort of jumps out at you. And as you know, I'm sort of originally from London, kind of moved down to the south coast in Dorset about 5 years ago. And whilst I kind of get out and about for up towards London for work and seeing clients, you know, I wanted to keep things as local as possible, if it's all possible, just from an investing perspective, in case you need to go and see stuff, do viewings, etc., etc. So yeah, I just started looking around at kind of commercial and kind of mixed use properties as close to home as possible, kind of typically within an hour, half an hour where I lived. Went to view some properties, you know, most of which weren't necessarily the right project, because there were a lot of sort of development work involved and kind of conversion, that kind of thing, which wasn't really an area I wanted to sort of go down. I wanted to kind of de-risk as much as possible and sort of focus maybe on sort of more paper-based asset value enhancing exercises. So the first property that we sort of transacted on was effectively a property that an agent was marketing that had already viewed another property on that I didn't go for, but then went to view that with them. Kind of got a bit more info on that. It was a mixed use block, and yeah, originally I wasn't overly keen. I think you remember, because there was effectively it's a block of 2 shops and 5 flats above. And I think at the time, because I just had much experience at Ordington in terms of direct investing, just wasn't too confident in terms of the residential elements and that kind of thing. But I think once I sort of got under the skin of it and kind of looked at the numbers, it kind of just looked more and more compelling in terms of how we kind of structure that deal.
Yeah, absolutely. And so absolutely, you kind of looked at that one. We stacked the numbers, and so you got a very significant proportion off your asking price, and I think that's like the holy grail, isn't it, in terms of trying to do that, to get a deal to stack. So how did you do you want to kind of quickly talk through the numbers on that, in terms of what the asking price was and what you managed to achieve in terms of buying it for, and kind of why you think you were able to achieve such a big discount?
Yeah, so the property itself had been on the market for about a year or so, with predominantly a residential agent. The agent sort of based quite locally. You know, they dabbled in some commercial property, but mainly they're kind of residential sales and lettings. It had been on the market for a while. The asking price was 875,000. which kind of on the face of it, when you kind of looked at the rental income, which was at the time about 60 odd thousand, didn't seem wildly off what it should be. And the property was kept in pretty good condition. The vendors had owned the property for 40 years. They'd originally traded from the property in terms of their own business, and then later bought the rest of the property and sort of bought the freehold and converted bits and pieces into residential and sort of carved bits off. And they were just looking to effectively downsize their portfolio, cash in a little bit. They had some other investment properties that they were keen on retaining. And I think, from speaking with the local agent that was marketing it, they just hadn't really had any offers at that price. So I think ultimately it was just overpriced for a block in that location. When we looked at it, we looked at kind of stacking the numbers in terms of how we would purchase it effectively. And we looked at basically a title split method of creating new leases on the uppers and sort of separating out the commercial elements and then sort of refinancing and that kind of thing to sort of add value from day one. And ultimately just kind of built in the numbers in terms of what made sense. The figure that I think we sort of got to was around sort of 620 or something in terms of an offer price, which is obviously significantly below the asking price. I kind of took a little bit off that for wiggle room and kind of made a bit of a cheeky offer of sort of 610,000, fully expecting them to come back and reject it. So kind of threw that in there, kind of left it for a week or so, and then had a call about a week later from the agent to say that they sort of discussed it at length with their clients, and they were happy to proceed as long as we sort of cracked on with the transaction. So I think ultimately it would kind of boil down to kind of vendor motivation. They were keen on just selling up and kind of wiping the slate clean with that property. They hadn't had any offers for a while. Part of the commercial element was sat vacant as well. I don't, the property itself was unencumbered, I think, so they were still getting a decent income from the block itself. But I think time was just ticking on. Both the vendors were in their 70s. They just wanted to kind of move on with things, really. So I think, sort of time was the biggest motivator for them, and just the lack of other solid interest from other investors, really, that probably would have looked at it, crunched some numbers and thought, no, it doesn't really work for us, and would have walked on without necessarily putting in that offer.
Yeah, no, I mean, some amazing lessons to unpick there. So first of all, don't be worried about putting an offer out that's below the asking price. There's a lot of properties on the market at the moment that are overpriced. So, don't pay the asking price, or you think you've got a great deal just because it's 10% below the asking price. As Pani said, unpicking the numbers before you offer. But ultimately, that vendor motivation is key. This has been on the market a long time, probably on with the wrong agent potentially, and also it had been let through an agent that probably wasn't the right agent as well, or that the vacant unit had been on the market with an agent that probably wasn't the right agent as well. And I've got quite a few client examples of that, where that happens, where it just happens to be on with the wrong agent. And of course, what the market thinks at that point is that property, that unit or that property is unlettable. And and quite often it can be a really simple reason why it's not let. But we'll go on to that. We'll go on to that in a minute, Penny. So 265k off the asking price. That's a pretty good reduction. So the block is two ground floor commercial units, one which is like a charity shop, which is on a lease, isn't it? And then 5 flats, all above 30 square meters, which is important. So do you want to kind of just talk through the financing strategy? Because obviously these deals are pretty much finance deals, aren't they, with the title split and everything?
Yeah, absolutely. So one of the ground floor shops was on a longer term lease, had about sort of 2.5, 3 years left to run with a national covenant, which is great, and they've been in there for sort of 20 odd years, so I don't think they were going anywhere, and they were quite happy. The rear unit had been a hairdresser's and basically become vacant several months before, and the landlord vendors hadn't hadn't marketed, or said they hadn't marketed because they wanted to keep it kind of flexible for any sort of purchaser coming in. But again, I think that probably would have added to people's apprehension in terms of whether it's lettable or not. All the flats were tenanted, and a lot of the tenants have been there for a while. The first step that we sort of took really on the title split method, and to try and sort of de-risk it and kind of figure out where the numbers were as early on as possible before kind of going too far down the road in terms of spending money on sort of surveys and bits and pieces, is we've got a lender valuation done on one of the flats just to kind of test the block effect and test the market in terms of where we think the values will come in at. So the block comprised of 4 2-bed flats and one 1-bed flat. And we kind of went with sort of a middle of the road sort of 2-bed flat just to kind of test it. We went in at 150,000 on one of those flats, being a bit bullish on it and thinking, we get a bit less. Valuation actually came back spot on in terms of 150k on the valuation. That kind of gave us the confidence then to basically instruct on the other valuations for the rest of the flats. Obviously, you've got to pay fees, application fees, and bits and pieces for that process. So we did that, and then all the other flats pretty much came in line. So we've got 150 on each of the 2 beds, and we've got 100k on the 1-bed flat. So all in all, basically valued up at 700k for the flats alone. Bearing in mind we're only paying 610 for the block as a whole, including the commercial. So we basically set up a couple of different companies in terms of structure. So one to hold the leaseholds in terms of the long leases that we put in place for the flats, and one to hold the commercial unencumbered. And then just for due diligence, we commissioned a commercial valuation for the commercial element before we bought it, just to kind of figure out, okay, where do we think we're going to land on the commercial valuation for the term finance later? Because the idea was to get the buy-to-let mortgages on each of the flats, basically bridge or get a commercial bridge or private finance on the balance in terms of deposit and purchase costs, and then go to term finance on the commercial after completion, just to be able to effectively pull all the money back out. So it kind of gave us that confidence to sort of crack on, really.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
Yeah, perfect. So yeah, absolutely, getting that valuation done before you buy is so crucial. And you can also put special assumptions in. So you put the special assumptions in, or you asked for the special assumptions, which is give this is the valuation as of now, but give me the scenarios if we let the commercial unit, etc. Is that right?
Yeah, so one of the commercial units was obviously empty, so we kind of got the lender, the valuer, to give us three scenarios. So MV, market value, kind of full paper value, vacant possession value, as if the commercial elements were empty and you have to sort of market them and give some incentives away and that kind of thing, and also VP 180, which is effectively like a forced sale kind of scenario for the lender, kind of worst case if they had to get rid of it quickly. And I think it's important to kind of get those values clear, because when you're going for lending, the valuer is, generally speaking, not going to lend on market value basis. Some do when you tick certain boxes, but most of them won't. They'll go on VP or VP 180. So you kind of need to know what the net position is to kind of work out your kind of worst case scenario. So that kind of gave us more or less a kind of a bottom line of where we were going to be on the numbers, which which tick the box. And every value is kind of slightly different in terms of how they approach it, but at least it gave us some confidence, sort of to purchase and then on the refinance thereafter, really.
Yeah, no, absolutely. So we had this vacant unit that you thought was going to be worth about £6,000 a year rent. So what's happened with that, Panny? Before you bought it and since you bought it?
Yeah, so the unit was vacant when we bought it. The previous vendor had always pretty much let it out at around 6,000 a year, just to sort of various kind of health and beauty type uses. So it kind of lends itself to that sort of use. Interestingly, the value that we had in go the first time, just to give us an idea of what we were looking at pre-purchase, only valued the rents about 4,500, just over. So they weren't terribly confident with it, but at least we kind of knew what the worst case was for that. Leading up to the purchase, I basically spoke to the vendor and said, look, we're obviously purchasing the property. This is our time horizon. Do you have any objections if we start marketing the vacant unit and see if we can get somebody interested and kind of lined up sort of as close as possible to completion? They were very happy with that on the basis that we didn't put a lease in place pre-completion, so we completed and then put a lease in place. So yeah, effectively I did get a local agent, one or two local agents, to have a look at it and see if they'd be interested in marketing it. I think proportionately their fees were quite high, and they probably just didn't give it the focus that they should have given it in terms of that scenario. So I decided to kind of give it a go myself. So especially for that kind of market, small property, startup businesses, that kind of thing. So basically just put some Gumtree adverts out, Facebook adverts, took some inquiries. And yeah, within a few weeks, we effectively had the property under offer. It kind of coincided with the Christmas break, which wasn't that helpful in terms of getting legals and bits done. But we pretty much kind of first or second week back in Jan afterwards, we got them signed up and they've moved in. So I think the key with kind of smaller startup type units is to kind of go for that local market and kind of be proactive in terms of letting, just because I think you have much more success. And I think agents should just typically aren't really motivated to kind of let those kind of units. It's not very exciting for them in terms of fees and sort of the size of the properties.
Yeah, absolutely. It's a great tip there from Panny. So that's definitely my experience, right, working with clients right across the country and for my own investments as well. Like, whilst commercial property might be hands off, when you're creating the value, you do need to be on top of it for sure. And Facebook Marketplace, Gumtree can be great places to find this. But it's interesting, isn't it, that the market thought that this was an unlettable unit, or it really put them off. But you pretty much led it to almost, you could have had two occupiers. In there, you had two interested parties before you'd even bought it. So, that just gives you real comfort going into a transaction that, you're going to get that let, doesn't it?
Yeah, I think so. And I think it was just other kind of utilising social media. So kind of get your local Facebook groups, business groups, that kind of thing, and kind of posting on there. There's all sorts of bits that come out of that. So I think we had at least 3 or 4 people that were very, very interested in it. I was quite particular in terms of who I wanted to go in there. So there were certain uses that I just wasn't very comfortable with putting in there just from a personal perspective. But yeah, generally speaking, we could have had at least 2 or 3 tenants go in there. And actually the price that we achieved for the lettings, we kind of marketed it at 6,000 a year, in line with what we thought we could achieve. And we did that. And in fact, we got a lease in place with kind of annual fixed increases as well, which again is all in place, and that's on an FRI basis where they're contributing to other bits and pieces as well. So that was a big sort of tick in the box for that.
Yeah, and a big testament to your lease consultancy work, which we'll come on to in a minute. But so Penny, the idea of this deal was to be all money out on it. So kind of where are you with that now? Kind of what are your kind of approximate numbers? I know you've not quite finished your refinance.
Yeah, so originally when we looked at the numbers and kind of put the offer in, the idea or the plan was to, as I say, title split the flats, effectively keep them really flexible, and then go term finance on the commercial. The original plan was to actually sell off one of the flats post-purchase to basically pay down some of the debt and make it an all money out deal, because I was quite keen for that to happen on the first deal, albeit fairly highly leveraged and not the best cash flow, but just wanted to kind of recycle the money and sort of go again effectively as quickly as possible. Because of the valuations that came back on the flats, they came back a bit better than we thought we'd achieve. It basically covered everything, so we were able to thankfully retain the block as a whole, which I'm quite grateful for, because it kind of removed a lot of the risk for that, and kind of removed a lot of the cost involved in terms of the purchase costs as well. So we're able to retain the whole block. So, in terms of the numbers, asking price 875, purchase price 610. We had purchase costs around sort of 85k that we had to find in terms of deposit and stamp duty and fees and surveys and bits and pieces. Sort of post purchase, we sort of effectively have sort of tweaked the rent up from about 60,000 to about 73,000. So some of the residential flats were under rented. We're slowly sort of creeping those rents up to the sort of market levels. We've let the rear commercial units for 6,000 plus, and the sort of front commercial unit will get increased in a year or two when that lease kind of comes up to expiry. So post completion, we've basically let the vacant unit, gone in for term finance with a lender and valuation, a sort of asset panel valuation on that. Valuation came back pretty strong. We got a market value of 200,000 that actually valued the front commercial unit at 4,000 more than we're actually getting, which is quite handy to know, for later on when we're looking at renewing the lease with them. And they put a vacant possession value of 175. So that was kind of our sort of ceiling in terms of lending a sort of loan to value based off that as a valuation figure. What that means, kind of in summary, is by the time we do the refinance, which should go through in the next 2-3 weeks, so we're in legal stage at the moment, with everything else is done and approved, a few weeks for the legals, we'll basically pull all the money back out. So all that initial kind of 85-90k cost will come back out, and we'll get an extra 40k back in our pocket as well. So kind of all in, we sort of created about £200,000 worth of equity plus 40k cash from the bank effectively to go again. So yeah, pretty pleased with that. As I say, the cash flow is not as high as it could be because it's fairly highly leveraged, just because of the way we structured it, which we've chosen to do at this stage. But yeah, ultimately all money out and then we can go again.
Fantastic. Such a cracking deal. Congratulations on that. And a lot of hard work's gone into that. But I mean, I think it just shows that these deals are out there, and importantly, they're on the portals. This was openly advertised on Rightmove, wasn't it? This wasn't like any off-market magic you were playing here. This was on market. It was just a very motivated vendor and just a really clever structure that was put in place. And it's a bit of a top tip to everybody. If you can find these mixed use blocks you probably need more than 3 flats on the uppers to kind of make it work. To commercial units where you can asset manage below, like they are working well at the moment. So huge congratulations on that, Panny. And what's next then? Kind of starting to put offers out on other things at the moment.
Yeah, so looking to do more of the same really. So looking at mixed use blocks, either pure residential blocks or mixed use commercial, ideally just to add a bit of extra sort of value add on the commercial leasing side of things. So we're sort of getting out, seeing stuff, putting offers in, just seeing what stacks, and also just kind of working with some joint venture partners and investors as well, just to sort of help sort of accelerate that as well. So on the lookout really for anything that's kind of relatively close to home, kind of southwest, south of the country.
Yeah, perfect, great. And I just think I'm going to probably slightly embarrass you now, but just for the purpose of everyone listening to this, like genuinely, Panny has been a textbook client. Like everything that I've suggested he's done, and he's implemented it. And genuinely, like, okay, sometimes, I mean, Panny found this deal within 3 weeks on the portal. So quite often it doesn't happen quite as quickly as that. But it's just a case of putting the activity in, and just the daily habits and putting the activity in. And that's what Panny's done with Spade. So huge congratulations, Panny, on that deal. It really is a cracker. So I'd love to obviously definitely get you back when the next one comes through, and the next one, because I'm sure there are going to be many, many more in your portfolio. But I'd love to have a chat with you about your lease consultancy, because this is something that Panny has specialised in for many, many years. And I think kind of as a commercial property educator, trainer, and as an investor, actually, you kind of, especially if you're not used to commercial, or you're relatively new to it, or actually if you just want to spend your time as an investor doing the work rather than actually kind of changing leases or whatever, having somebody like Panny in your team is so useful, because somebody who really understands how to negotiate leases. Because quite often we add value by restructuring leases, doing lease renewals, putting new leases in place, and you just need somebody who knows what they're talking about. So kind of someone like Panny is really, really handy to have in your address book, just to make sure that you kind of bring somebody who's got the expertise. So Panny, tell us a little bit more about the kind of work you do for clients on the leasing side, or the lease side.
Yeah, thank you. Just to sort of reiterate on the Weymouth deal. So I think just to say those deals are out there, and they are quite often on the portals. Do they sort of fall out of trees? No, I think you do need to really, really look for them and kind of do the numbers on them, and sort of get yourself out there with them and speak to all the agents. And they're not necessarily the easiest transactions to do. I think on paper they definitely work, but there are always going to be challenges with those kind of deals. It was a very, very steep learning curve for me in terms of just all the bits and processes that you've got to go through. And we certainly had some challenges with that block on things like valuations, things like planning permission. We had to sort of get some planning permission during the purchase process for one of the flats that didn't have the right planning in place, that kind of thing. So I think you just got to work through those issues. And I think it's important, as sort of Suzi alluded to, you've got to have the right team in place to do that, whether it's mentoring, support, education, professionals, whether it's people that are doing lease plans, architects, the right broker, 100%, the right solicitors, that kind of thing. Right commercial lease consultant if it's got commercial in it, that kind of thing. So I think just make sure you're taking advice from the right people, just to make sure you're not sort of tripping up on those elements. In terms of the commercial leasing side of things, so as Suzi said, I've kind of been doing this for 20 odd years in terms of commercial lease consultancy, and that's across a broad spectrum of industries, whether it's kind of office, retail, industrial, and more specialist uses. And it's kind of acting on behalf of kind of both business occupiers that sort of operate commercial businesses, and also landlords and investors and sort of bigger propcos. In terms of the investor side of things, there's lots of ways that you can add value doing paper-based exercises in terms of value add, and that's all kind of down to, which I'm sure you'll hear if you're an avid listener of this podcast, you'll know all about kind of how to create value through longer leases, stronger rents, better covenants, better utilisation of space. And that's really what it boils down to, kind of looking at things from, an investor perspective and from a lender's perspective in terms of, how can I get better financing on this? How can I de-risk this asset and this property and this tenancy and this lease agreement from both lender's perspective and also from you as an investor, just to make sure you've got a more secure sort of income stream going forward. Because what you don't want to be buying is headaches. You want to be making things better for yourself and easy for yourself, which is partly one of the benefits for investing in commercial rather than say residential. To give you a couple of examples of kind of investor-led kind of advice, I had a client that sort of approached me recently. They had a retail unit, a block or retail shop that they bought, and a commercial valuation, sort of lending panel valuation done on it. The tenant was Ladbrokes, bookies, so big tenant, hundreds and hundreds of shops, know what they're doing when it comes to lease negotiations. They had a VAS panel valuation done. It gave them a rental figure. They had a rent review outstanding on the shop. Landlord decided to trigger the rent review with Ladbrokes directly, basically quoted the same rent, the sort of maximum rent that the valuer had put down, which is fair enough. Personally, I'd never go in at that figure because you'll want to give yourself some room for negotiation, but kind of went in at that figure. Lad Brooks internally said, look, no, we're not happy with that. We've done our comparables. We think the rent should stay the same, effectively go away. Landlord came to me, said, can you help us? We had a look at it. What we ended up agreeing was we negotiated a rent even higher than what they'd originally triggered the rent at in the valuation and what they'd already asked for. And in addition to that, we'd negotiated that the tenant would take an additional 5 years on their lease and refit their unit to a more modern standard. So actually, by the time we kind of went through that process, they got a higher rent, they got an extra 5 years with a really good covenant and a whole new shop fit. So that was a really big win for the clients. Another example, client came to us with a mixed use block, a bit like the one I recently bought, but with 3 or 4 shops on the ground floor and then a block of flats upstairs. All the shops were effectively had outstanding rent reviews or had lease renewal events that needed triggering. We basically took it in one go, kind of looked at it, assessed all the rents, measured everything up, looked at the market rents and everything else, came up with a suitable strategy to how we were going to tackle and trigger those rent reviews and lease renewals. So it's quite strategic in terms of how you want to go about things. It's, ultimately from a landlord's perspective and investor's perspective, it's all about creating market evidence. So you effectively pick and choose which transactions to go after first to then create the market evidence to then use for other transactions. So we kind of picked one property, dealt with that first, picked it off. That can then kind of sort of nailed the rent where it needs to be. We then moved on to the next one, negotiated that. Again, that kind of reiterated where the rent needed to be. Again, we're now dealing with the last one, which was a couple of properties on lease renewal transactions, which again, the tenant can't really argue with because the rents are now proven. So rather than kind of going sort of all guns blazing, kind of, on the whole block, we kind of strategically sort of bided our time and just kind of pick those through and kind of work through those numbers. So just kind of finding the right solutions for the right scenario is kind of quite important when you're looking at kind of asset valuation and trying to add that value.
Yeah, for sure, and absolutely textbook. And just to reiterate what I've just said, like genuinely, it's not worth cutting costs on this kind of stuff. If a lot of commercial asset management is paper based, and so you're not having to do. Sometimes you might want to do some refurb or whatever if you've got a new letting, but it's purely to facilitate a better tenant, a better rent and a better lease. So a lot of our asset management is paper based. And so you absolutely need to have somebody who has got a track record, understands how these things work. And lots of, I've now got CPA clients using Panny on lease renewals and lease negotiations because, it's just so important. So we'll kind of get your details out at the end, Panny, and obviously put them in the show notes to make sure that people can get in touch with you on that. And kind of what's your, just as an observation, kind of what's your, given that you're at the coalface with a lot of these leases, is there any kind of trends that you're seeing at the moment in terms of how tenants are approaching kind of lease events and, brands different than kind of one man, one woman band type organizations?
Yeah, definitely. I think it kind of depends on the industry and the type of tenant and the size of the organisation, I think, in terms of what their approach is. I think the bigger corporates are typically going to be more cautious in terms of just wanting a bit more flexibility in their leases, especially retailers, that kind of thing. They'll typically not commit to more than sort of 3 years term certain or sort of leases with breaks at least every 3 years just to give themselves that flexibility, which is understandable. I think if you're looking at different kind of industries like the leisure sector, that kind of thing, where there's a lot of fit out cost, there's a lot of trading that goes on with kind of buying and selling businesses, you quite often put longer leases in place for those kind of tenancies and those tenants. So it's just kind of knowing which approach to take with which kind of businesses really. I think generally tenants will typically not bury their head, but they'll just have other distractions in terms of running their businesses when it comes to lease events. So when it comes to, triggering a rent review. Most tenants don't actually realise that they can even proactively trigger a rent review. They just think, okay, the lease says it's reviewed every 3 or 5 years, and if the landlord forgets to trigger it, then I'll just leave it alone, or I can't do anything about it. Whereas actually they can proactively trigger it. There's normally clauses in there that you kind of utilise. So that's what I'm advising tenant businesses when I'm kind of doing that. But from a landlord's perspective, it's quite important to know that actually, as long as those reviews haven't been formally triggered and documented, you can actually go back and backdate those reviews and actually charge back rent, interest and everything else, depending on what the lease exactly says. And so I am finding quite a bit that there's lease renewal events and lease rent review events coming up from 2025, 2026, where lease events and reviews going back from even as far back as 2020, typical kind of COVID period where landlords just weren't typically triggering rent reviews but didn't actually do anything about them, and tenants didn't really push it. They're now kind of coming to me and saying, look, we've got a review or a lease event coming up. We've got this old review which we'd like to kind of look at as well. And typically speaking, you're probably not going to get an uplift on those older reviews, although sometimes it is possible. But what I always say to the client is, okay, let's just throw it into the mix and put it in there and just use it as a bit of leverage. And even if we don't, actually try and go for an uplift, just have it there and just see if we can use that as leverage. And that is quite often quite useful, just to have it in there and kind of, as part of the overall negotiation, kind of agree to knock that on the head as a nil increase or something in exchange for having a bit more of a sensible conversation on the current kind of lease events happening. So I think it's important, especially if you're looking at buying stuff, have the lease events been triggered? Have they been reviewed? If so, check the documentation. I mean, again, I've had it in cases where clients bought something thinking a review hasn't been documented, and then we go and trigger the review, and then a tenant comes up with a signed bit of paper that says it was documented from a previous owner. So you do need to be a bit careful and do your due diligence. But yeah, just look at all the value add opportunities and just make sure you're approaching it in the correct way, just to maximise value.
Yeah, great tips. And I think we're seeing a lot of kind of baby boomer type retiring landlords at the moment who, a bit like the one you've bought, Penny, where they own it for 40 years. And, I think that we can probably all recognise that commercial property is probably about if you've got it on the right lease and you buy the right property in the right location, then it's about as hands off as you can get for direct investment. Because, you do have these full repairing, insuring leases, you do have longer leases. And if you've got a good tenant in there, obviously you can collect the rent and they have to repair. But it's really important not to be a passive investor and to, and I think that's what a lot of kind of long-term landlords, not everybody, that would be a huge generalization, but a lot of deals I'm seeing coming across my desk, they just haven't been managed very well. And of course you do need to, just because it's hands off doesn't mean it's passive. So obviously there's opportunities there. I've got a client who one owner had owned the property for 30 years, and I think there was 15 years of rent reviews outstanding, Penny. So that was that was the most extreme one I've ever seen. So there we go. Great. And it does happen, yeah, for sure. So yeah, so we'll put Penny's details in the show notes. And also, Penny, I just want to give a little shout out to your brand new property meet that you set up. So Penny's recently set up a property meet on the South Coast. Do you want to kind of tell everybody the details of it?
Yeah, absolutely. Thank you. So as of March the 12th, we will be launching our Property and Poppadoms events. So I'll be hosting that event in Dorchester in West Dorset, which is kind of aimed at investors and people that are interested in property, basically along the southwest. It's going to be a fantastic monthly event. We're going to have guest speakers with some absolutely sort of gold nuggets for everybody in terms of their investing journey. And I think we'll sort of do a bit of a twist on it and kind of give it a bit of a commercial focus as well, just bearing in mind kind of my background. And yeah, the event's kind of focused around a bit more informal networking, an hour or so of guest speakers and information, and the rest of it will be sort of a sit down sort of top notch curry and just really good informal networking with kind of like-minded people. So yeah, if you're around, feel free to sort of go online and book on.
Perfect. So that's March the 12th, 2026, just in case people are listening to this a year hence and
Yes.
trying to get a good curry. Good stuff. Well, Pani, thank you so much for joining me today. I mean, I think just so many nuggets there for everyone listening too. And, genuinely textbook execution from you. So it's been an absolute pleasure working with you on that. And here's to many more deals, which I'm sure that will happen. So how can people get hold of you, Penny? We'll obviously share the details as well in the show notes.
Yeah, absolutely. So the consultancy website, if you want to go onto there, is windsor-grange.com. So Windsor Grange is the consultancy. Maven Property Partners is our sort of investment and sort of JV and kind of investor arm as well. So we're sort of launching a newsletter and a new website for that imminently. And yeah, we'll sort of put the contact details in the show notes, and yeah, just feel free to reach out directly and just ask any questions, or if you need any help, happy to sort of bounce anything off me at any point.
Perfect. Thanks, Penny. And it's been such a pleasure talking to you today. Thank you so much for joining me.
Thank you.